Carolina, what is it? We can hear you all. Oops.
Well, that's all right. I mean,
all right, everyone. Good afternoon, and hopefully our colleague Peter Daneyko will be joining us here right away. I just want to. Wow, I can't believe it's the week has gone by so quickly. It's quite amazing each time we do this that the amount of energy, and of course, first I want to just say thank you to all the great speakers that came out, took time out of their day to provide their insights and education to provide better clarity for everyone. And as I said before, we want to make it as easy as possible for you to be able to reach them by simply visiting KoreSummit.io. Click on the speaker section on the main menu, and there you'll be able to find all the speakers and be able to find their bios. You can connect with them on LinkedIn. And then, of course, we even provide you their email address because we don't want to stand in the way. We want to make it, again, you want to have to be engaged with them. We want to make sure that you have that ability to do so as quickly as possible. I know in markets like ours right now, everyone is trying to get things done today. So we're going to recap really the whole week, not in detail in any area, but obviously we've invited Laura here, who's played a role in the real estate sector, advocating for tokenization since I met her, and probably even before then. And then, of course, our esteemed colleague Peter, who had the pleasure of being literally in every panel. That was not deliberately done.
Oh, I think that was deliberately done. That's just, don't ever leave your calendar open for more than 15 minutes at Core Connects, or you'll be invited to host panel or participate rather quickly. But no, it's been a pleasure.
Yeah, it's you got to look back and you got to think about everything that was captured today for everyone's perspective. That is, you learn the journey of raising capital using different regulations. What happens when you're doing that process? And I think if I was going to summarize it for everybody really quickly, one or two words, you heard it's a gathering of a crowd, of a community. You're building a community of people, partners, those who will be, joining your community for what you're working on. But nevertheless, everybody's building a community. You cannot do this on your own. And I think that's one of the biggest changes. I think I get often asked this question daily, Oscar, what makes one race more successful than the other? And I just had this conversation yesterday with a colleague, and because there was an offering that didn't succeed. And I said, you can summarize it to one very simple word. When they try to do everything themselves without working with others or building a community, it's very difficult to utilize these regulations to the fullest. And that's I think it just kind of says it all. And there have been a number of webinars throughout this week and by other partners we have who speak of that. And hopefully that will resonate. People will get that building that community is the key. But let's talk about the real estate and where it's going. So first, I'm going to go to you, Laura, because we're going to recap. So based on everything you're gathering from this week, you've been on most of the panels and participating. Where do you think people are in the scale, let's say 1 to 10, when it comes to, for sure they're going into real estate, but is tokenization the 100% solution for them based on what you heard this week at all?
Yeah, thank you for having me again. I really appreciate being here. And you guys are just the leaders in education. So I'm just grateful to be part of this. When it comes to tokenization, we're constantly having this conversation all of the time. And we're still at the very beginning. I think that there is a need for some projects. It's ideal. It would be, beneficial, and maybe for other projects, it's just not. And it really just comes down to the need of the project, and talking through it with the owner, the issuer, the company, what their goal is, what their long-term goal is, what that looks like, and trying to set up for, with the end in mind, right? Go into this with the end in mind, and I don't know. I mean, that's kind of what our perspective has been here.
Okay. And Peter, you
Yeah.
were moderating all of them.
Yeah. No, just to segue from what Laura just said and what our earlier panelists had said, it's really it starts with the education, but it's really that issue or understanding what are my needs and my requirements. And then you dovetail into the regulations and don't get caught up in vernacular. And I think that's probably, to me, what I've learned throughout the panel and over the years is the terms sometimes are misinterpreted and they misrepresent, or they're just lack of education or lack of definition to the masses. We hear this term tokenization. It means so many different things in different sectors. So when it really comes down to it, if you start with trusted partners that have expert area in a specific discipline, and if you know what you're planning to do when it comes to your real estate raise, say, hey, I want to raise $100 million. Here are my options. Maybe I'm using these exemptions. Maybe I'm going through a VC. Maybe I'm going through alternative financing channels. Maybe I'm raising capital using all three of them, or a combination of different options. But knowing, first ask your question. I want to raise capital. What's my purpose? And then understand, what are all the pieces to my puzzle? Oscar, you mentioned I need a community, or I need to build a community. Do I want to go through that point? You got to be intellectually honest as an entrepreneur, as a real estate developer, as whatever you're going after in the space, to say, am I willing first to understand all the key requirements, such as marketing is a big lift? Am I willing to go through this exercise? Am I willing to realize that I probably need a smart team around me? I need quarterbacks. I need people that are going to say, hey, I understand the pieces of the puzzle and I'm going to help you along that journey. But I keep coming back to one simple thing in this entire space: know the regulations. If you know the regulations up front, at least at the high level, they're amazing regulations. They may or may not fit with you, but don't put a square peg in a round hole, because 2 years down the road, you might handcuff yourself. When we talk about where does a Reg D fit, where does a Reg CF fit, where does a Reg A fit, they all can coalesce. But so plan up front. I mean, at the end of the day, plan up front, talk to people to become educated. And, and then I think your fundraising journey is going to be far greater opportunity to be successful. And it starts from there.
Well, that's good. I mean, it is interesting. I don't know if Laura will remember this. I created a video just especially for you. Do you remember?
I sure do.
And it's funny. I'm using it more now than ever. So I want to thank you for that.
Oh, thank you.
Because you forced me at that time to bring something that I think people just needed to break it down. And I think for the audience here today, I'm just going to share something that was inspired by working with Laura, because she's been, actively involved with our company and as one of the main quarterbacks helping real estate sponsors and all that. And, when we first got started, it was all about tokenization. And I'm going to come back to this, Peter, because it will come back to the regulations. But what I found overall, because there's so much chatter, and here's the other part of the chatter, which we'll get to, is some people speak in general terms, and that means some people may read it from Canada thinking one thing, the US another, UK and the other, and not realize once you go down that rabbit hole that, oh, wait a minute, I forgot to ask, is this even legal in the country where I'm in? But nevertheless, we'll get to that. So one of the things that I think it's important for everyone, hopefully to the audience here, is learning about tokenization and learning about real estate market, is that it is one of the biggest asset classes in the world. In fact, one of our speakers and core partner, Andrew Korn from E5A Integrated, wrote an article about the size of the market in real estate. It's $328 trillion globally. I mean, this is it is the major asset class that investors like. And up until now, the asset class has been limited to a certain audience. So when that asset class is so big, there are many, many different layers to it. There's just not one layer for all. And two, the narrative can get very confusing if people don't understand where the narrative that people are talking to, it fits in. So in this chart here, I want you to understand tokenization works. It really does. It is going to be a game changer in real estate. I'm going to give you the first example, the property managing the actual property itself, which is it's managed by governments today, land titles and all that. I'm going to give you, this is not a joke, this is real life. It happened no more than a month and a half ago here in Canada, where a couple was they were holidaying somewhere in Europe for an extended period of time. While they were away, their home was sold. It was sold. And interesting, and guess what? Everybody said this would have not happened if we were using blockchain. And I agree 100% with that narrative. 100%. Had they tokenized that property, had they put it on the public chain and all that, this would have not happened. And for various reasons. So here we got a major piece to the puzzle to fix, but the only people that can fix it are the governments or with the private sector. And what kind of chain could that be? Well, that could be a public chain. That could be any form of chain. Why? Because it's fitting an environment that has a larger audience, public, private, and so on. So you fix that. The next piece is now you have that property. It's generating income, and you're an investor in it, and you want to have better transparency to it. Can blockchain be a game changer? 100%. So now you got the ownership component, and now you got the daily operations all on blockchain. Let me just put it to you this way. If that ever gets completed, with the problems we have in real estate today about value and all of this and fidgeting the numbers is gone. We are going to a zero, like T0 has their name. Yeah, we're going to a T0 here component of fraud or anything like that in real estate. So those are two that you can utilize any type of chain, whatever is available out there that it will fit, because the requirements, they're not regulated in any way. So how they propose to do all that with accounting systems, fantastic, game changer. Now, here's where the wall comes in. And this is where it gets really challenging, because people keep thinking that how you manage things and all of this, you can carry it through all the way until you got to raise capital. And unfortunately, you can't, because the narrative here has to begin with a very different position. You have to start with what are your capital requirements, and based on your capital requirements, which regulation best fits you. And there are, again, and I'm only speaking for US-based companies. So I'm even going to give this answer in a way that is very clear to people. I am not here to provide this narrative for people out of Canada, UK, or other countries. This is for US-based sponsors raising capital today. These are your choices. You can raise Reg D. You got a limited capital you can raise. You got a limit of 2,000 shareholders. And one great individual out there, if you can help me again, I forgot his name, Laura, Dave Hendricks, the CEO of Vertalo. He said it best in one of his points out in the market. He said, if you're going to have only 2,000 shareholders, why would you tokenize 2,000 holders? And he's correct. What's the merits behind it? Are there merits in managing from an administration? The answer is yes. And then, of course, we have the other follow-up regulations like Reg S, where you can sell to outside of U.S. citizens. And again, you still have the 2,000 shareholder limit. So it's the same. Regulation CF and Regulation A give you the ability for unlimited, but the regulators have very strict regulations on how it's managed and who manages and how it's sold. So when you understand that, I think it fits into what you were saying, Peter, is that the regulations are the starting point. And once that begins, you can have a real meaningful discussion with an audience about what will work for them versus what won't. And then it makes lives easier for people like Laura, who are trying to help a sponsor who's very eager about tokenization. And I want to use that because it'll give me the market. And she can begin the narrative with a starting point that has some, great fluidity to it, where are you a US-based company? Yes. Okay. this is a good starting point. Do you know what I mean? I find it that where we've come from, look, I've been doing this 14 years to where we are today. It's where we've come from to where we are now. It's amazing. And just so you know, in 2012, when President Obama signed the Jobs Act, and the year following, we had a crowdfunding conference. I'll never forget this. A platform went on stage and said, we just did $30,000. And everybody applauded. It was the greatest moment. I know, you're all laughing. I know. But then a CEO none of us had ever heard of went on stage, and he's doing his presentation, and he said, for the year 2013, we did 1.2 billion. People's jaws dropped at that moment, and we're like, what on earth is he talking about? He was doing real estate. And real estate took off, and today we have over 30, 40, 50 different platforms offering choices to investors. And today, the form of liquidity hasn't emerged yet, but that's the next topic. So it is an exciting topic. I think it's exciting. I think we're getting better clarity. I've been listening to all the panels in the education, building the community. But I don't know. I mean, I'd like to hear your feedback on this, Laura and Peter. Did you get better clarity? Do you think the clarity is coming out better to help out the entire sector?
Yeah, I absolutely do. I think that, like you continue to say, and you've continued to say, and you've said from the beginning when you and I first met, right, it all starts with regulation, and it starts with, compliance and painting in the lines. And from there, then we can expand, right? Then we can continue to broaden our reach and continue to educate on the topic. But it really, I have this conversation a lot with people around the subject of, what's it going to take to mainstream? Well, we have this really incredible already put in place infrastructure of regulation here in the US. So, we can proceed. And I say this all the time. This is the most practical application of blockchain in real estate, is tokenizing real estate, because there's this already existing framework that we can clearly see, we can clearly follow, and as long as we do that, we're going to play by the rules and we'll stay compliant.
And that's the key, is being compliant with that. Something that there was an interesting takeaway on one of the panels today that I thought caught my attention, and it was one of the marketing firms. And question that I always get, it's, hey, can you give me the aggregate numbers of how much capital is being raised under this regulation, that regulation? And here's the challenge. There isn't a central thing. So I'm gonna paint this picture. So there's certain environments where I can look at a CF, and those are funding platforms. So funding platforms, based on the nature of themselves, are going to say how much capital is raised aggregates and collectively on a funding platform. And that's part of the FINRA guidance, etc. So I'm on a funding platform, so I can say, hey, the average raise is X, $300,000 on a funding platform. And how many of the, the winners in the soft raises, and here's a $5 million raise. But companies that are raising capital on their own using tech now, and this is a bit of a commercial for Kore, I mean, in a sense, but the reality is, if they're controlling their own destiny, and we don't know all the numbers due to different reasons, but when the marketing agency goes, I raised more money doing Reg A's in real estate than all the funding platform combined, that's one. It tells you that it's working. They're just not disclosing, hey, I raised $50 million on my Reg A offering, because it's not like a data set. It's kind of like any private company disclosing their books to everybody, and this just happens to be at their primary with their capital raise. But that really perked up my ears, because we hear about the challenges, we hear about the soft raises. We've had some amazing raises come through our platform, to the tune when people go, wow, this company raised 5 million, 30 million, 50 million in multiple raises. So those $100 million raises using the exemptions are very real. But unless they publish it, nobody knows what the aggregates are. So just even hearing these anecdotes in the real estate space, and some raises that I'm seeing today, because if the issuer publishes, hey, I've just raised $40 million and I've got 10,000 small retail investors, it just says that it's working and it's evolving. But I think it's a bit of a whisper behind the scenes sometimes. You're on mute, Oscar.
I know. I just cut that. Sorry. I'm doing the Peter Daneyko. Mute myself and hide. The question I have is, so one of the things that I was doing, because when Andrew sent that article, the dollar amount was just staggering, right? And I know some of our partners companies like Invenium are targeting the institutional side of real estate, which is a totally different gamma again. But even if you just take the general one that we're dealing with, I went and looked at all the real estate projects that are raising capital today, sponsors and stuff like that. And I know this is just a small grouping. I found a total of 150 plus platforms online on an average with 30, 40 deals at any given time. But what was surprising by that is that none of them were tokenized. So here's the question I have for you, Laura. When you're dealing with a sponsor, is this someone traditionally from the real estate sector that is now looking into it? Because this is the curiosity I've had for a while. It kind of helps the audience as well. Or is it someone relatively new who sees the opportunity of the two, the asset class and the technology? What do you see?
Yeah, I mean, we're really seeing from the real estate side, the owners, the developers, the syndicators, they're hearing this term tokenizing. They are thinking that this is, some of them are thinking, oh, we'll tokenize, we're going to sell these tokens and we're going to raise capital, and somehow it's tied to, this whole new, different source of investors, which, that's really not the case, right? We're still targeting a real estate investor, right? We're still targeting that demographic, but the interest that we're seeing is coming up primarily from the real estate industry.
That's good though. That's encouraging. So that means the narrative has reached that audience. But you said something really interesting there. I think it's important for everyone, is that the audience they're going to be targeting is still the existing real estate investor. It's not that crypto investor that people think that's the one that's coming into it. That investor does not see this the way people are expecting. This is not, for them, it's sort of like, okay, that's going backwards. I want something what I'm doing today, trading crypto, like flipping back and forth, in the private markets, that we're not there yet. Maybe in time that will happen. And Peter, I know you're dealing with it, working with Laura. Are you seeing the same thing? I mean, I know we talk from time to time, but I mean, there's been quite a bit of real estate transactions lately.
Yeah, there's a lot going on in the real estate. To dovetail on both your comments, though, which I found was interesting, was you're right. It's not necessarily that crypto investor is looking for real estate. However, and I'm talking from the crypto investor that says, oh, I want to buy this asset, I'm offshore, let's be honest, and a lot of these, many investors simply want anonymity and want to hide their assets. That's just my take on it, right, wrong, or indifferent. But what we are finding a little bit, though, is there's this whole concept in a compliant way to deal with the payment rails. Now, I have an asset that I've got Bitcoin, for example, and I want to diversify my portfolio. I want to sell some Bitcoin. There's mechanisms to convert your Bitcoin into fiat in order to buy your digital security in the real estate. Now, today, with what's been going on in the banking rails and FTX and everything else associated with that, crypto to fiat transactions for securities offerings can be fully compliant, but the SEC might just have more scrutiny and more, look harder at it. In spite of the fact that we're still doing KYC, ID, verification, anti-money laundering. I simply make that comment of I see people with other asset classes looking at real estate as simply diversifying their portfolio, and some of those individuals will be those individuals that are in the crypto space. That's all.
That's and I think it is positive. Look, I think all the discussions we're all having, I think is really important. I think for the audience, hopefully today, for all of you that are listening or watching the recording, there's some really important terminology that I think will help you as well when you're reading certain materials or you're being invited to certain. There is a big difference between an institutional component of real estate versus non-institutional. So as you probably heard in our audience, we're talking about everyday Americans of the age of 18 who are investing in real estate of their, with their own private company or themselves or their IRA that that fall under these regulations. Institutions are governed different; they use different regulations, similar regulations, but it will seem that everything we discuss it's not needed, and that is correct because regulators treat them as big boys. They know what they're doing. They have different rules they need to apply. You hear words like custodian versus transfer agent. You hear things like custodial versus escrow. So it's really important that we try very hard to make sure that when we are talking about what we are doing is US one, number two, audience, and understanding that there are other players. So I have no problems telling you, hey, go to the Invenium event, go watch. You want to learn about institutional real estate? You're not going to find a better place to learn about it. I mean, that's what institutions are doing. But please learn this part. How institutions manage and govern and raise their capital and how you're going to do it for your own entity is night and day in another planet.
You brought up a really good point, and I think foundationally, and even to Laura's comment earlier, starts how much capital you're trying to raise and what's the nature of the real estate offering that you're trying to do. And if somebody says, "Hey, I want to raise $500 million," I'm probably not using these regulations, guys, to start. What's my jumping off point? They may come into a piece of the puzzle. It's a different narrative, But if we take a look at it and say, I want to use a Reg A offering for up to $75 million, and I might use this as to help my cap stack when I'm going to the bank because I need $20 million to assist me with phase one of a project, for example. Again, it starts with that planning. And Laura, you've been teaching me all kinds of new things on real estate that over the last year that I have no clue about. I'm going, oh, is that how that works? What's that terminology? So we're all becoming educated every day about areas that we didn't know. Hey, I'm a tech guy, hub and spoke guy. I know that at the center is this, and it needs to integrate with this. It might not know the details of the integration and connect all the dots. But when it comes to the rules and the regulations and the possibilities, as a community, we're learning all those things together. And what's going to happen tomorrow, I think, is going to be really, really exciting for everybody involved in the space.
I agree.
To touch really quick on one thing that you had said, there's projects that we're talking to that are billions of dollars, right? Huge projects, city developments, community developments, things like that. There's resort developments that are enormous, that have funding. And we're still talking to them about implementing community involvement, right? We're a social cause aspect of the development where they're going to raise and they're going to bring in some investors around the community, maybe through a Reg A, maybe through a CF, $5 million or whatever it is, to involve the community, right? Gain support of the community, have the community support the success of the project. And we're seeing social cause in those massive projects that don't need, like you guys are saying with the institutional funding, they're funded, but there's this really important aspect that we're starting to realize is important, and that's the community, and involve them, involve them.
And I think that's the real evolution with, the whole concept again from, the Jobs Act, the concept of democratizing capital. It's going to take many different flavors. And originally, when we think about crowdfunding in the back in the days of Kickstarter, when Kickstarter would say, hey, help me build this and I'm going to give you whatever I build, and hopefully I get a chance to build my new electronic gadget, right? And it wasn't from a securities perspective or an equity perspective, but it was a fun, exciting time. And this makes me think of this as kind of like a full circle environment to say, okay, because that's one thing we are seeing a lot of, Laura, is we're seeing a lot of companies that are or entrepreneurs that are saying, I've got a social impact. I want to do something in the real estate in my community. And they're going to have a myriad of different funding options associated with that. And they want to include the community more and more. So yeah, I hear what you're saying. Just got me thinking about some real exciting projects that I mean, they're very inspirational as well as aspirational from a potential investor perspective. But sometimes it's just a good thing to do, and you don't want to lose money, and you want to make some money out of it, and you're going to say, I'm bettering my community. So is that a benevolent investor? It's probably a hybridization of being benevolent and at the same time, being financially astute to say, you know what, and I'm going to be a benefactor, and my generationally, it's going to be, my family's going to be a benefactor. So there's so many different flavors in the real estate space. Hey, there's the pure REIT, really simple to understand. If you guys execute, we're all in, and we're going to keep putting more money in because I'm seeing my 8, 10, 20, 30%, well, maybe not that, but my 18% returns. And they paved the way for that next real estate entrepreneur that says, hey, I see how they're doing that over here, and I've got a skill set in my domain. And this is where education becomes so important.
Well, this has been great, guys. And Laura, it's always a pleasure. And again, it's good that we all understand, hopefully the audience today, this is a journey. I'm very excited to say that I'm now celebrating my 14th year in this journey of online capital formation, where it started with a simple idea, with a simple thought by one person. His name is David Weil IV, the former vice chairman of NASDAQ, who made it all happen. And look what we created, a brand new sector that is moving from a sector to using a different form of managing things. And it is fairly massive. I mean, so we are looking forward to that. And for everyone here today, share your thoughts, ideas, questions. There's no such thing as a crazy thing. We wouldn't be here today if we didn't keep pushing the envelope. But the one rule behind everything we do at KoreConnex and with all our core partners is the rule we have is compliant, the right way and the only way. So until our next KoreSummit, which will be coming soon, there'll be many this year in different areas. Look forward to having you again. I want to thank all our core partners who participated in these great webinars. Peter, Daneyko, Laura, thank you both today for closing off this wonderful week. You guys did an amazing job providing this information. Till next time, everyone, look forward to seeing you again soon. And if you want to get more information, go to KoreSummit.io. You'll be able to get links to the speakers as well. You can go visit our YouTube channel or our LinkedIn page, and you will see all the recordings coming out soon. We'll talk to you soon. Take care, everyone. Bye-bye.